Nikunj. In fact, it is very imperative to have a very clear list of do's and don'ts. And Pulak also has a very clear list of what he avoids. Let's understand this.
Okay, so avoid crooks. Simple. Ek bar chor, bar chor. Nothing changes and nothing will change. That's Pulak's idea, that if you are a management who has not taken care of minority shareholders in the past, he will not bet in them, and as a result, if a management has a poor track record on governance or on capital allocation, he will not invest in that company. Second, turnaround stories. Turnaround story means ये company में होने वाला है, ये हो सकता है. So do not buy the future based on storytelling and assumptions. Turnarounds may happen, turnarounds may not happen. Stay away from companies which are M&A kings. There are a lot of companies which essentially have this binge to grow by acquiring growth. That's M&A. Market history has told us that 8 out of 10 M&As globally have failed. Sure. And the 2 which they have succeeded, it's very hard to understand whether they will succeed or not. And I'll give this very classic example. Motherson Sumi, I think, has championed the art of M&As because they understand the capital allocation. But if you look at a lot of other corporate groups where they've really gone on some kind of a binge in terms of M&A, those M&As have not really translated into what the real attempt was. So avoid companies which essentially are M&A junkies, which is they keep on doing M&As to grow their balance sheet, because ultimately you will move away from the businesses. Then Pulak has always avoided PSUs. Now you may argue back and say that, "Arey, is boom mein kya hua?"
Governance issues.
That's the view of a management. I don't agree with it.
What he
Personally,
cited,
I don't
yeah.
agree with it. So what we are sharing here are views of Pulak Prasad. So he has avoided PSUs, which means that he pretty much has missed on this entire bull market in
From
PSU
space. Yeah.
So the temptation, I think, for a great manager or a great investor is that you know what you understand and you know what you don't understand. Markets may do strange things in the short term, but you should not have envy or you should not have FOMO that, okay, I don't understand PSUs, but PSUs are in bull run, others have made money, I will come back. That is the discipline. What will differentiate you ultimately is going to be skill and risk management. In a good market, it's not how much you make, but in a bad market, how much you save. And as long as you don't understand, so Pulak has made it very clear that, look, I don't understand certain PSU companies, so I will not buy them. Which means he may have missed out on the bull run, but that's the way he's okay with it. Similarly, he does not buy companies which essentially are conglomerates, which means companies which have multiple businesses, he avoids them. MNCs.
If you like this video, then like, share and subscribe to ET Now.